all, welcome to Billionaire. So in this video, we'll check if the Nifty has made a top and will it correct by 6 to 11% in upcoming days. So this is not to scare you, but 10% correction is considered as healthy for the markets. We will check the possibilities whether the Nifty has made top or it can still go higher and higher. What is the level after which our analysis will go wrong, and what is the level after which the analysis could start giving you the indication that there is a potential consolidation and down move in a Nifty possible in a start of the year. Yeah, so let's get started. We'll discuss Nifty's move with price action indicators first, then we'll check Elliott Wave and understand what is the Nifty's move for next week and for next session. So first, let's discuss Nifty's move with price action and indicators. So here you can see Nifty, after making big red candle, opened gap down, and then on the same day it made a bullish candle touching the 13 EMA. So this is the 13 EMA line, blue line. This is 48 EMA, this is 100 EMA, and this is 200 EMA. Nifty is very far away from 200 EMA. Last time it touched here and then started the rally. I think this was in October 2023, right? So after that, Nifty is continuously rallying on the upside with multiple days of gains and with the gaps. So right now, Nifty in last session, Nifty has made an indecisive candle, but there is a 10 points gap left on the upside. So Nifty on last Thursday closed at, okay, sorry. So yeah, watch out here. So you can see that Nifty closed here at 21,778, and on the last sessions Friday it made a high of 21,770. Watch out here. Okay, so we have to compare the high when it opened gap down. So Nifty opened 21,778. So that means Nifty has clearly 8-10 points of gap left, right? Nifty did not fill that gap. So we have to be cautious now because of the gap open. We could be having potential downside opportunity. And here you can see this candle's low has been broken in the last session, but Nifty did not close below that. This is not a big gap down. This is called as partial gap down, and the gap left open. So there is a possibility that we could be doing the trend change. There could be a change in the trend, and we could start a potential consolidation or a drop on the downside. So for that, what we need to have is next session Nifty needs to close below this low. Okay, so then only we can say that the trend is going to be consolidating. Either it will go towards 13 EMA or it will continue going on the downside, because the markets are clearly going up and up for multiple days. So what are other reasons that we can see here from the indicators? Indicators here show a little divergence on RSI. By the way, divergence can be formed in a multiple tranches. Like it can go like this, it can again go up, it can form the divergence and then can give the dip. So this is also possible, but right now what we see is divergence. If Nifty breaks below, if RSI breaks below 70, this is a start of consolidation. That's for sure, right? Here, another indicator that I have on my screen is Aron, which is of 25 length. So Aron indicator here clearly shows the bullish trend, and RSI is still in the bullish zones. So above 70 is a bullish zone. By the way, it's not overbought. It can remain in overbought territory for a longer time. You can see here from the start of the December, Nifty is in bullish trend. So almost 1 month it has spent in the bullish zones. So if you consider that market is overbought based on RSI and then buy a put, you will be punished heavily, right? So this is not overbought is not correct use to go and sell the market, right? So that's not the proper way to do it. You need to see that Nifty or any index or any other instrument continues to make lower low, lower high formation along with the RSI going below 70, then only you can consider that the consolidation or a drop has started. So while coming down, what is the support that we have? Let's plot that as well on the chart. So here, if I go and select this horizontal line, so I see support here, right? So here is the support near 21,470 somewhere, right? So 3-4 touch points are here. That's where our support lies. Okay, and after that we directly have support here at 21,000, right? So these are the two support zones that we need to watch for. Nifty may come like this, bounce from support, and then again continue toward downside. If it makes lower low and lower high formation, do not mistake. If it breaks this high, this analysis will go wrong. If it breaks this high of 21,802, then our view of downside will go wrong. It will continue heading higher, maybe towards 22,000. Okay, 22,000 to 22,000. 100 200 maybe. Okay, after that. So yeah, for now we still see there is a slight divergence, and there is a still opportunity to go up as well if it breaks this high. If it breaks this low and closes below that, then expect this gap to be filled easily. This gap is at 21,650. Okay, and also the support, then the support, next support lies around 21,470 something, right? So there is a good chance that it will slip towards these. Let's switch on to Elliott Wave and understand what's the view of on the Nifty. So this was our view on December 10th, 1 year ago, that Nifty is trading higher and higher, and it will move like this. We did not had this sharp third wave on the upside yet, right? So this is not yet formed. So this tells me the second chart, like this takes me to the second chart. We updated our charts later on once it was consolidating, and we expected Nifty to make an ending diagonal or leading diagonal structure. And right now, after it has broken above this trend line, right? Nifty has broken above this trend line. So this trend line has been broken. So that clearly tells us this is not an ending diagonal, and we do not have a fall immediately coming in. So it could be leading diagonal until it does not break. It does not break 22,200, 300 levels. So why 22,200, 300 levels? Because this length, okay, when you plot from here to here, okay, this comes here, okay, near 22,200, 300 zones. So if Nifty breaks that, then this also is not a leading diagonal structure. This is something else, and this could be an impulse structure. Our wave count could be wrong, right? So our wave count is based on the fact that there is this pullback of big length, okay, and here also we have 5-wave structure. So these are all zigzag moves, and these are considered as a leading diagonal structure with the 3 waves internally. Okay, this is what our view is. Here also you can clearly see a 3-wave structure. Here the 3-wave structure is not clear, that I admit, but yeah. So what I'm assuming here is this B wave is small triangle, and we are going up, and we have crossed major levels along the line. So let me tell you those levels. So this was again another view on October 14th that will drop on the downside. We made a smaller low here as a C wave near 18,880 something, and then shoot higher. So here was the view once it started the pullback. That was the view was shared on say 5th of November, and exactly this was the bottom, and after that Nifty had started up move. This is not exact ABC that happened. It did not give a long consolidation or big retracement in B wave and continued higher. And the B wave looks to have finished here itself as a small triangle in this area. Okay. Now what we are expecting in this chart on December 9th, what we were expecting on this chart was Nifty to still head higher and head towards 21,500 to 570 zones. It has even crossed that level. So imagine now the Nifty has stretched far enough, or you could say it has went above our levels, and it does not mean that it cannot break, right? So our analysis invalidation level is 21,200 to 300 zones. Once it breaks that, this wave structure of 3-3 wave needs to be rethinked, and our wave count will go wrong. So right now, if Nifty starts to go down, and if it breaks 13 EMA, then only we should consider the downside case. And here we can see that from the lows of 15,000, I think 151 something, sorry, 181, I think, right? From there, if you plot Fibonacci from this point to the latest top, only if we starts to go lower and lower, then only we can consider that the 0.236 Fibonacci, that is the minimum retracement coming at 20,200. Okay, and then 0.32 Fibonacci coming at 19,300. Okay, so these are the levels that we need to watch out on the downside. Let me zoom in a little so that you can have a clear view on those levels. So these are the levels 0.236 and 0.382 Fibonacci. So let Nifty close below this, then only these levels I would consider to be activated on the downside. And how much is that drop? If you consider 0.32 Fibonacci, then it will be almost 10 to 11% drop. It will not, I will not say that it will hit only this level and then it will go up. It can even further go down or it can go up, but that depends. When we start to see Nifty makes higher high with the gaps, then we can conclude that the drop has over, right? Apart from that, this is the 11% level, 11.5. And if you consider this level, it should come minimum down towards this. So 7 point, what is this level? 7.2 to 8% is what you can assume a minimum level that Nifty should retrace. It may take 2-3 months to reach those levels, and it may consolidate 2-3 months. Why 2-3 months? Because it should consolidate longer than its internal waves, internal correction waves, right? That's the rule of Elliott wave. So when we check that time duration, so how much it can consolidate? It can consolidate 105 days. Around this level, it consolidated. So almost 75 bars. So 75 sessions, it should consolidate if this is the top, right? So how much that comes? Let's check. So let's consider 76 bars. So 13 March is the date. And if we extend a little, maybe around, maybe by the end of election results, and after the election, we should start the rally. That is another view that I have. But all this will be invalidated if the drop levels on the downside that we discussed will get invalidated if Nifty breaks 22,200. Okay. So this is another chart that I wanted to discuss on hourly time frame. So from this point onwards of 20,976, you can see 5-wave structure, 1, 2, 3, 4, and 5 waves. Okay, and we have a gap left. So this gives me an idea to consider a bearish move possible if Friday's low 21,680 is broken. It will not dip in a single day. It will take time. It might do a time pass like this, go up, and then could give a dip, right? So that's also a possible case. So you have to be ready with your risk capacity. By the way, I do not suggest you to trade based on this analysis. It can go wrong as well. You have to use your own head and use this analysis as a reference. So now below 21,680, for let's say after a couple of sessions, let's say 3-4 sessions, Nifty could reach towards minimum towards 21,290. This is the minimum level. So if the drop has started, Nifty will trade below this in next couple of days, right? And it can even break this level. So this is our alert. If it breaks this is our alert that the potential up move could have ended. Okay, so that is this is another level that you need to watch for. So two things that you need to watch for. One is close below 13 EMA. Okay, that is first signal on daily chart, or you could say that is the most confirming signal, because on daily time frame 13 EMA break will suggest you that the Nifty is not going to break this top sooner. Okay, and this top will be held for multiple months. Okay, that is the major signal for you. What is the second signal? Nifty closes below this. Okay, 20,970. If you want more aggressive confirmation, it will be close below this 21,290. If Nifty closes below that, then also Nifty is supposed to be making a top here for multiple days or multiple months. Okay, so that's all on the Nifty's analysis. Hope you like it. If you have any doubts, ask in the comments. And thanks for watching. Have a great day ahead and Happy New Year. Bye bye.